Hey everyone, and welcome back. Today we're going deep on this article called The Gold Fix, Mar-A-Lago Accord.
Oh yeah, I saw that one.
Yeah, have you had a chance to give it a read through?
Yeah, I did. It's pretty wild, honestly.
It paints this picture of like a potential financial like earthquake,
Yeah.
global financial system changing, and we got to figure out what it means for you, the listener.
Definitely. And what I find fascinating is how it like connects historical events like that Plaza Accord back in the day to like potential, future scenarios with this Mar-a-Lago Accord thing.
Right, Mar-A-Lago Accord. It's catchy.
Yeah.
But before we get too far ahead of ourselves,
Yeah.
let's rewind back to the Plaza Accord for a sec, back in the 80s.
Okay, sure. Yeah, the Plaza Accord, that's actually like a key thing to think about if you're, trying to figure out what the US might do today.
Okay.
So back then, Japan was like this economic powerhouse, right? Just cranking
Yeah.
out exports like crazy.
Yeah, Sony, Toyota, like
Yeah.
all those companies were just hitting their stride.
Totally. And it caused some major like friction with American companies.
Right.
Think of it this way. A strong US dollar made American products like way more expensive overseas. So US companies, they're struggling. Well, Japanese stuff looked like a total bargain.
Yeah.
So this imbalance, that's what led to the Plaza Accord back in 1985, where all these big economies got together and said, okay, let's like devalue the dollar a bit.
Makes sense. But didn't that like backfire on Japan later on?
Oh, it totally did in a big way. The Plaza Accord made their exports way more expensive. And, along with some other stuff that was happening, it caused this bubble in their economy. And when that bubble burst, it like triggered what we call now Japan's lost decades, this like long period of economic like stagnation.
So is this article saying that like history could repeat itself, but with China instead of Japan?
Well, it's definitely drawing some parallels for sure. China is like this huge manufacturing giant now, right?
Right.
And some folks think the U.S. might be pulling a similar move to deal with its own economic problems.
Interesting. But wait, didn't Japan also have other things going on besides the Plaza Accord? Like, wasn't it a little more complicated than that?
Oh, for sure. It's almost never just one thing that like shapes an entire country's economy.
Right.
Japan had its central bank policies, its real estate market, even cultural factors that all played a part in what happened.
Yeah, that's true. So maybe looking at China only through the Plaza Accord lens could be an oversimplification.
Definitely. It's more nuanced than that.
So, okay, if we're talking about a potential new accord, what's the U.S. game plan this time around?
Well, the article says that the current administration seems to be going for like a multi-pronged approach, kind of tackling the trade deficit and national debt through tariffs, a weaker dollar, and boosting domestic manufacturing, like bringing jobs back.
Right. We've already seen how tariffs can shake things up globally.
For sure, but there's like a contradiction there, right?
Yeah.
The U.S. wants a weak dollar to help exports, but they also want to keep the dollar like the top dog globally.
How do you make those two things work?
It's a tough balancing act for sure, but the article points to this proposal from economic advisor Stephen Miran back in 2024.
Okay. What did he say?
Well, he suggested using capital controls to basically force American companies to reinvest their profits back in the U.S., kind of like how China does things.
So instead of companies taking their profits and investing them in like other countries,
Yeah.
they'd have to keep that money here.
Exactly. And that ties into this whole idea of reindustrialization that's been floating around.
Right. Bringing manufacturing back home.
Yeah. And Miran also suggested something pretty wild, creating a sovereign wealth fund.
Whoa, that's bold, right?
It is. It'd be like this massive investment fund controlled by the government,
Wow.
using American assets, natural resources, mineral rights, stuff like that to generate wealth.
So instead of Norway or Saudi Arabia having these sovereign wealth funds,
Right.
the U.S. would have one too.
Exactly. It'd be a huge shift from how the U.S. has done things economically, but the article suggests it could be a way for them to like deleverage their balance sheet.
Okay, how so?
Think of it like this. They'd be turning their assets into cash to pay down their debt.
So it's like selling off an antique to pay off your credit card bill.
Exactly.
Okay, so Terrace Capital controls a sovereign wealth fund. That's a lot.
It is.
But the article throws in one more thing that I thought was super interesting: gold.
Gold, gotta have gold, right?
I know, right? It's like something out of Indiana Jones.
Yeah.
Suddenly we're talking about bringing all this gold back to the U.S., potential tariffs on gold imports. And people are even saying that the U.S. might revalue its gold reserves.
And don't forget those reports of those big banks like JP Morgan Chase physically moving tons of gold from London to the U.S.
So all this gold flying across the Atlantic, is that a genius move or a sign that they're freaking out?
That's the million-dollar question, right?
Yeah.
The article says it could be a way to like get ahead of things, bring the gold back before they slap tariffs on gold imports.
And so they're protecting their stash of gold while also maybe using tariffs as a bargaining chip to get other countries to agree to this Mar-A-Lago Accord.
It's possible the article says they might use tariffs, capital controls, even security promises like NATO to get other countries on board with this new financial system.
And gold is like the key to all of this.
Yeah, maybe.
But how big of a deal are we talking here? What would revaluing the U.S. gold reserves even look like?
Now that is where things get really interesting right now. The U.S. officially values its gold at like $42.22 an ounce.
$42.
Yeah, that price was set back in the 70s.
Wow.
But guess what the market price of gold is right now?
What is it?
It's closer to $2,920 an ounce,
Wait, so they could just decide to change the value of their gold like that?
potentially.
And then on top of this sovereign wealth fund could like completely transform the U.S. financial landscape.
It could. We're talking about potentially adding hundreds of billions of dollars to the U.S. economy.
That is mind-blowing. So they're basically printing money, but using gold to back it up.
It's not quite that straightforward, but you're getting the idea. It's like suddenly realizing that your old stamp collection in the attic is worth millions more than you thought.
Right.
It changes your whole financial outlook, and that's what we need to figure out next. What does this all mean for the rest of the world, especially for big players like China and Russia?
Yeah, because they can't be too happy about this.
Probably not.
Okay, so we've talked about some potential big moves by the U.S., but what about everyone else? How might this affect other major players like China and Russia?
That's the big question, right? The article says this Mar-A-Lago Accord thing could put other countries in a really tough spot. They either go along with the U.S. and risk hurting their own economies, or they push back and risk getting isolated economically.
So it's like a game of chicken with everyone trying to figure out the best move for themselves.
Yeah, pretty much. But knowing what happened to Japan, why would any country sign up for something that could hurt them like that?
Right. It seems risky.
It is. But here's the thing. The article highlights that countries like China, Russia, and the BRICS nations aren't just sitting around waiting. They're actively looking at other financial systems, potentially challenging the dollar's dominance.
So they're like creating their own backup plans just in case they're worried about the U.S. pulling the rug out from under them.
Exactly. They've seen how the U.S. can use things like tariffs to get what it wants. And speaking of tariffs, the article mentions that President Trump has even threatened to put 100% tariffs on countries that try to undermine the dollar's reserve currency status.
Wow, 100% tariffs. That's pretty aggressive. It sounds like the U.S. is saying, play by our rules or else.
It definitely is a strong-arm tactic, and it shows how high the stakes are in this potential financial shakeup. The article actually mentions a historical parallel. President Reagan used similar tactics against Japan back in 1987.
Interesting. So there's a precedent for this kind of economic hardball, but I'm still not totally clear on how a Mar-A-Lago Accord would actually work. Could you give me an example?
Sure, like say India, for example. A country that has a big trade surplus with the U.S., a Mar-a-Lago Accord, might force India to let its currency get stronger against the dollar.
Okay, so that would make Indian products more expensive here and potentially reduce that trade surplus. But wouldn't that also hurt India's own manufacturing and service sectors that rely on those U.S. exports?
Exactly. It's a lose-lose situation. Cooperate and potentially hurt your own economy, or resist and risk tariffs and economic isolation.
It sounds like the U.S. is trying to solve two problems at once: shrink the trade deficit and keep the dollar on top. But the article also mentions something about security guarantees being part of this too. Can you explain that?
Yeah, the article says the current administration is increasingly connecting trade with security. It's like a you scratch my back, I'll scratch yours kind of deal. Countries that want the U.S.'s protection, like being part of NATO, might also have to play ball when it comes to trade and finance.
So it's like a package deal. Security and economic cooperation come together. But let's go back to gold for a second. You mentioned earlier that the U.S. Treasury might revalue its gold reserves, potentially injecting hundreds of billions of dollars into the economy. How would that work? It sounds like magic.
It's complicated, but imagine this. The U.S. Treasury could issue new gold certificates to the Federal Reserve based on the increased value of their gold. This would basically give the Treasury more money to spend without actually increasing the national debt.
So it's like finding a loophole in the system, using gold to create more financial breathing room. But wouldn't this affect the price of gold globally?
Probably the article suggests that this gold revaluation could push gold prices way up, making it even more attractive as a safe haven asset. Think of it like this. If suddenly everyone wanted that old stamp collection in your attic, its price would go through the roof.
That makes sense. And if gold prices go up, wouldn't that make the dollar weaker? It's like a seesaw. One goes up, the other goes down.
Yeah.
That's the theory. But it's important to remember that this is all speculation. We're looking at possible scenarios based on this article. Whether the U.S. actually does any of this is a whole other question.
Right, but the article does say that these potential moves could have huge ripple effects throughout the global economy, especially for countries like China and Russia, who are already trying to break free from the dollar.
Absolutely. If the U.S. does this, it could speed up the shift towards a multipolar world where the dollar isn't the only big player.
Which leads to the question, what would a world without the dollar as the dominant currency even look like?
Now, that's a question for the ages, and it's something we'll explore after a quick word from our sponsors.
Okay, so we're back and ready to tackle that big question. What would a world without the dollar as the top dog look like?
It is a pretty wild thought experiment, isn't it? Imagine a global financial system where the power is spread out more, with multiple currencies kind of fighting for influence. The article talks about how we're already seeing a little bit of this with countries doing more trade using currencies other than the US dollar.
So it's not just a theory, it's happening. Countries are finding ways to move away from the dollar. Are there any examples that really stand out?
Yeah, the BRICS nations, Brazil, Russia, India, China, and South Africa, they've been really active in this area. They've been increasing their gold reserves like crazy, which is a classic move to protect themselves if the dollar starts to tank.
It's like a global gold rush, but with central banks as the gold diggers. And the article mentions that Goldman Sachs thinks China might have way more gold than they're letting on.
Exactly. They're keeping their cards close to their chest, strategically stacking up on those hard assets. And it's not just gold either. China also controls a huge chunk of the world's rare earth minerals. Those are essential for all sorts of technology these days.
So they're building up their power base with both gold and these critical resources. But what does this mean for the average person, for someone like me or you listening to this deep dive?
That's the real question, right? What does it mean for us practically? Well, one thing that could happen is that our savings might be worth less if the dollar loses its top spot. It could weaken a lot, and that means our money wouldn't buy as much.
That's a scary thought. What can we do to prepare for that kind of shift?
That's where spreading out your investments comes in. Don't put all your eggs in one basket. We might want to think about putting our savings into different currencies and assets. Gold, like we've been talking about, could be a good way to protect ourselves if the dollar weakens.
What about cryptocurrencies like Bitcoin that was made to be decentralized, outside the control of any government or central bank? Could that be a safe haven in a world with multiple power centers?
It's definitely a possibility worth looking into. The main takeaway here is that this potential change in the global financial system means we need to rethink how we handle our money. We have to be open to new ideas and stay informed about what's happening.
So we need to be proactive, not reactive. Instead of waiting for the dollar to maybe collapse, we can start taking steps now to protect ourselves and even explore new investment opportunities.
Exactly. It's not about panicking. It's about being informed and making smart choices based on the best information we have.
That's a good point. It can be overwhelming to hear about all this potential economic chaos. But knowledge is power. By understanding what's going on, we can navigate these changes better.
And that's what we've tried to do in this deep dive, give you the knowledge and encourage you to keep digging into these important topics.
We've covered a lot of ground today, from that historical example of the Plaza Accord to the potential rise of a multipolar world where the dollar isn't king anymore. We've looked at the roles of gold, sovereign wealth funds, even cryptocurrencies in this changing landscape.
And while the future is still uncertain, one thing's for sure, we're living in a time of big changes, and understanding these changes is super important for anyone who wants to succeed in this new world.
So keep asking questions, keep learning, and keep diving deep into the things that matter most to you. There's a whole ocean of knowledge out there, and we're just getting started. Thanks for joining us for this deep dive.